Good afternoon, ladies and gentlemen. My name is Ryan Souter. I'm one of the senior investment managers here at Sharewise, and we're here this afternoon with Justin Brown. Now, Justin is the managing director of Element 25. He's been kind enough to lend us his time and expertise this afternoon regarding Element, just giving us a bit of a key update on their core projects at the moment. Now, just a bit of a background to introduce Justin before I pass it over to him for a presentation. Now, Mr. Brown is a geologist with over 25 years of experience in global mineral exploration, mining, and business development. He has been involved in a full spectrum of mineral exploration from greenfield through to mining and downstream processing in a range of metals. Mr. Brown has a keen interest in the role that ethically sourced critical raw minerals can play in decarbonisation efforts to reverse global warming. He started out at 25 in 2006, taking a corporate leadership role as founding managing director, guiding the business through numerous economic cycles and being the architect of multiple successful value accretive transactions in multiple commodities. In addition to an executive role in Element 25 Limited since 2006, Mr. Brown has also held a number of other board positions and has a strong track record of closing successful commercial transactions. Pretty good intro by the sound of things. So, we'll run these things that we usually do. I'll pass over to Justin to give us a presentation for the company, and then we'll open the floor up for Q&A. As always, I've got a couple of questions prepared following the presentation. Now, ladies and gentlemen, if you have any questions you'd like me to ask Justin, please submit them through using the Q&A function on Zoom, and I will ask away. Justin, thanks again for your time this afternoon, mate. It's all yours.
Thanks, Ryan, and thanks for having me, and welcome to your listeners. I'll, as Ryan's indicated, I'll kick off with a run through of our latest presentation, which will give you a pretty good sense of where the company's at and where we're going. And then from there, look forward to taking any questions that I haven't covered in the slide deck. Is that coming through okay, Ryan?
So that one's just come through with the presenter view. So if you just want to go try it again with just traditional.
Try that again.
There you go.
That's working better?
Yeah.
All right, beautiful. Okay, technical issues out of the way, let's get into it. So for those that aren't familiar with Element 25, the secret's in the name. So manganese is the 25th element on the periodic table, and obviously we're Element 25 and we're all about manganese, and we're building a low carbon sustainable manganese supply chain around our globally significant Butcherbird project located in Western Australia. So pretty much everything you're going to hear today is about manganese and its role in traditional and new energy markets, and where we want to take the company around that commodity. There's just the usual disclaimer and forward-looking statement comments you can read at your leisure. This presentation will be available on our website and the ASX platform shortly, if not already as well, if you want to digest that later. Just as an overview, the Butcherbird project, which is pretty much where we putting all our efforts to build the company, is located in the southern Pilbara region of Western Australia, just south of the big iron ore mining town of Newman. And we take our material north from the project up through Port Hedland, where there's well-established bulk commodity handling facilities at Utah Point, which are dedicated to iron ore, manganese, and other commodities as well. We've already had what we call our stage 1 operational phase at Butcherbird, and we've exported a number of cargoes through Port Hedland. Those supply chains are well established, and what we are basically doing is looking to expand that operation for two reasons. One, to feed into traditional markets in partnership with our offtake partners, OM Holdings, who have smelters in Malaysia, but also to provide feedstock for downstream processing to produce high purity manganese sulphate, which is a critical raw material for battery manufacture. And it's worth noting that we've done two pretty meaningful transactions with General Motors and Stellantis around the supply of high purity manganese sulphate into their EV supply chains. That facility is going to be built in the US, and so this is a vertically integrated supply chain story. Worth noting that Stellantis has taken a position on the register with a 11% shareholding. They're our largest single shareholder at the moment. Stats on the company: we're listed both on the ASX under the ticker E25, on the OTCQX under the ticker ELMNTF, and we have 280 million shares on issue, and as we sit today, no debt. The company is led by a pretty experienced team of people which range in disciplines from technical through to financial through to legal. There's a wealth of experience amongst a core team of executives who are guiding the company, everyone from lawyers to geologists, in the case of myself, to accountants and engineers. So very well led company, in my opinion, and we look to build that with an emphasis on owners' expertise being the way we tend to drive the company forward, rather than having a heavy reliance on external consultants. We think keeping the knowledge and IP in-house is the best way to build the business. The project itself is a little bit unique and worth just dwelling on for a moment. It's a massive resource. We've currently got JORC resources of around 270 million tonnes of manganese. It's got plenty of room to expand beyond that. There's obviously a point where there's no benefit to drilling more when you've got 20 plus years of mine life ahead of you. So, but there is more to be drilled in due course. And the ore itself is sort of special in that it's very, very low in toxic, or very low in contaminants generally, but in particular low in toxic contaminants, things like heavy metals, acid forming materials, those sorts of things are just simply not there. Very clean metallurgically, and it produces an excellent product for both smelting and downstream hydromet processing for the battery industry, as I touched on before. The large resource has just been updated to convert a fair chunk of what was inferred a couple of months ago into measured and indicated. You can see our latest resource statement published in October, and we're currently putting together an updated reserve to build around that and underpin a mine life that's should be somewhere around the 20-year mark. You should see that formally announced shortly. But basically, it's a big resource. It's got a long mine life ahead of it, and it's going to allow us to grow the business quite aggressively around that resource. The first step in that growth is to build a 1.1 million tonne per annum manganese ore production facility, which we published a feasibility study for earlier this year. We're working through the project execution phase of that, including detailed engineering, project financing, and the like. We hope to start construction of that next year. And on the back of that resource and that production capability, we're well advanced on the planning stages for our Louisiana high purity manganese sulphate facility. We've just announced recently support from the US government in the form of a $166 million grant that we've been selected for. We're in the process of bedding that down and formally contracting that, but that also sits alongside about $115 million US of financial support from General Motors and Stellantis. And then beyond those two key sort of now projects, if you like, we also have ambition to expand globally and build refining capacity in other sectors, not just the US, but also Asia and Europe. We just had a big year. This is just a slide from our AGM presentation, giving our investor base an update on the activities that we've been involved in through the course of the last 12 months. It's been a difficult period for battery metals, and it's been a difficult period for global growth and commodities generally, but nonetheless, we've done a lot of work in the background on both of these two key projects, both the mine and the downstream processing project. You can digest that at your leisure, but there are some pretty key milestones, most notably around financing and project execution for those two projects, including a resource upgrade, which is our most recent announcement. So we're well on track to close out a pretty big year, and we've got a very clear plan forward next year to repeat the dose and get these projects underway. The project itself, just zooming in a little bit, I won't sort of labor the detail, but it's a really simple, flat-lying, big deposit. It's located in a jurisdiction which is obviously globally sort of well regarded in Western Australia. This is not a trivial matter, given the, you've seen some of the geopolitical issues that are going on around the world at the moment. People do want supply of critical raw materials from stable jurisdictions, and we're fortunate enough to have a world-class deposit located in one of the best mining jurisdictions globally, which is Western Australia. And the long mine life means that our offtake partners can rely on secure supply for many decades to come. The project is blessed with infrastructure. We've got the Goldfields gas pipeline and the Great Northern Highway transecting the project, which means that we don't suffer from the tyranny of distance as much as some projects can in Western Australia, which is a big place and obviously has limited infrastructure. We're fortunate enough that the deposit is situated right on top of two key pieces of infrastructure. It's worth noting that the mining lease, which contains the reserves that we're about to publish, is fully granted, and approvals are all but in place. The final approvals should come in the early part of 2025 for that expanded development. The geology is very simple. It's a laterite cap on a regionally extensive manganese deposit. We mine it using pretty simple free dig methods. We have to do very little drill and blast. There'll be a few areas of the cap rock that we will have to drill and blast, but for the most part, it's just free dig using conventional truck and shovel. It's above the water table for the first 10 to 15 years of mine life, so we don't have any dewatering challenges. And it's got a very, very low strip ratio of about 0.4 to 1. And it's a clean process where we just simply wash out the clays and produce a concentrate that we can then ship out as a bulk oxide manganese product that goes to both the smelting infrastructure in Asia, but also the downstream refining capacity that we're building in Louisiana. The expansion is going to be important for scaling up and reducing costs. It'll push us down the cost curve and establish us as a large-scale, globally significant producer of manganese ore at a cost which is competitive with competitors, and really puts us in a nice position on the global cost curve. We're going to apply learnings from our pilot plant that was run for a couple of years from 2021 to A, improve process, B, reduce costs, improve efficiencies, and also reduce our carbon footprint, which is important when we are delivering a critical raw material into the EV battery supply chain. The plans are well advanced. We've just completed our FEED study for this project. We're in discussions with various financing partners, including the North Australia Infrastructure Facility, with whom we passed the strategic assessment phase early in the year. You should be able to look forward to some positive announcements on project financing early in the new year, and we'll get into the build phase as quickly as we can. Once this is operational, we'll be really nicely positioned on the global cost curve, comfortably in the bottom half, and at a position where we'll be profitable through all parts of the manganese price cycle, which does ebb and flow with global economic activity, given its link to the steel industry. But we'll be nicely positioned at the bottom end to enjoy profits through all those various price cycles that affect the commodity space generally. Downstream is a extension of what we're doing at Butcherbird, so we'll take that material and we'll direct some of it to our Louisiana facility, where we'll undertake a proprietary leach process, which we've developed over the last 7 or 8 years, and we'll produce a very low carbon, low cost, high purity manganese sulphate product, which will fit nicely into the battery supply chain for electric vehicles. And so you can see there a schematic representation of the flow sheet on site. We'll basically mine, we'll crush, we'll scrub, and we'll concentrate to produce a lump oxide product. And then what doesn't go to the smelters will go to Louisiana for conversion into a high purity manganese sulphate product for the battery supply chain in partnership with General Motors and Stellantis. The long-term plan is to use what we call a hub and spoke model. We want to use the world-class resources of Butcherbird and the IP that we've developed around downstream processing to develop multiple refineries around the world. The first one will be in the US, as discussed. Secondly, is potentially Japan. We've done an MOU with Nissan Chemical Corporation, and we're looking to develop those plans over the next year or two. And then beyond that, we've got discussions happening in Europe and the UK to build refining capacity in that part of the world as well. And we think there's a genuine, 10 to 15 year growth path for us here, where we just continue to expand that refining capacity on the back of the world-class deposit at Butcherbird. The process that we've developed for converting the ore into high purity manganese sulphate is unique in that it uses a different process to what is currently used in China. Worth noting that about 95% of the high purity manganese sulphate currently produced globally is made in China. It's not a new story. That same story can be heard around rare earths or graphite or other critical raw materials. Manganese is the same. What we're looking to do is provide our customers with an opportunity to decouple from sole dependency on China, and in doing so, we're also bringing to bear our proprietary technology to reduce costs, reduce waste, reduce carbon, and produce a more efficient, cleaner product that they can then put into their electric vehicle batteries and help meet their decarbonisation plans, which is obviously a key part of the global effort to reduce global warming and CO2 emissions. So we fit nicely into that thematic, and that has been quite an attractive feature of our offer to General Motors, Stellantis, and other potential offtake partners as well. Just to give you a sense of that, the CO2 intensity of the element 25 high purity manganese sulphate is significantly lower than anybody else's that are currently in production, for which we have available data at least. We're currently sitting at around 1.7 kilograms of CO2 for every kilo of manganese sulphate. That is at the bottom of the global landscape in terms of CO2 intensity. We've also got opportunity to further reduce that by including renewable energy and things like green reagents and the like. So we'll continue to push that lower, which is part of our commitment to our customers as well. We've also recently completed our first benchmarking exercise with the Digby ESG process. You can read a bit more about that on our website, but we're positioned nicely and looking to improve that profile again to satisfy our commitments to our customers to be a credible, high quality supplier of these commodities, both from a cost perspective, but also an environmentally and social responsibility perspective. Just a little bit on manganese in batteries. The landscape obviously around EV batteries is quite diverse and ever changing. You can see here that whilst there's been a little bit of negative press around EVs this year, you can see that 2024 was another record year for EV production. If you read the press that's been coming out since this graph was published, there's another record year in China. I know there's a little bit of slowdown in some segments as the European and US supply chains sort of get their head around changing political environments and things, but I think the numbers speak for themselves. This transition to EVs is ongoing and will continue. One of the things that's driving that is this dramatic and continued reduction in the cost of batteries. We have now passed the magical $100 kilowatt hour threshold for electric vehicle batteries, which is a number that's often used to underpin the cost parity between electric vehicles and ICE vehicles. We've crossed that threshold now, and I think that's another sign that this transition is going to continue. And whilst the pace of change may ebb and flow with changes in political whim, I think the fundamental macro transition remains well and truly in place, and the numbers are in support of that. Manganese specifically is a really attractive battery metal because it is A, more abundant, B, cheaper, C, available from a diverse array of potential suppliers, of which Western Australia is obviously one, and it can satisfy the ESG obligations of the battery makers along with their geopolitical and cost drivers as well. So what we're actually seeing happen now is a transition away from the traditional high nickel cathodes into cathode materials that have ever increasing proportion of manganese. And this is happening through high manganese ternary chemistries, but also in the Asian markets through the transition of LFP to LMFP and other manganese bearing chemistries. So we think the future for manganese in batteries is really, really strong. And the data is supporting this kind of gradual but accelerating transition away from high nickel cobalt chemistries to higher manganese consumption. And there's a whole bunch of benefits that come with that, including the ones that I've discussed, but also safety and the ever-present driver of cost. In terms of what we're doing in Louisiana, we've just announced the support of the US government, as I indicated, with a $166 million grant that we've been selected for. We're in the final stages of locking down the contracts that go with that grant. So we're hoping to announce the finalization of that grant shortly. And that sits beautifully alongside the binding commitments from General Motors and Stellantis for a further $115 million. And we're just in discussions with financiers to close out the relatively small gap that those two packages leave. And we plan to bring the details of that to the market as soon as we can. Basically, what the US is wanting is to support this local domestic supply of critical raw materials. You can see from this schematic flow sheet that pretty much everything we're going to do is going to be US centric. So we'll bring manganese ore from Australia. Obviously, there's a critical mineral partnership between Australia and the US. So in many aspects of US policy, we're seen as a domestic source anyway. And then we'll couple that ore with the local supply of reagents, labour, and expertise to build this facility, which will be designed to service the local car industry and really reduce the US reliance on foreign supply for these critical raw materials, in our case, specifically manganese. The process itself is very heavily focused on a circular economy approach, where we reduce carbon, we get local reagents, local labour, but we also produce our solid waste in forms that can be used in other industries. So we kind of get as close as we can to a zero waste footprint, if you like, which is also another attractive aspect of the E25 technology, which allows us to build in places like Louisiana or potentially Asia and Europe, where other refining sort of technologies that would produce a lot of solid residue may struggle. So we fit beautifully into that landscape, and obviously the US Department of Energy has jumped in behind the project with that support in the form of the $166 million grant, which we're looking to finalise. And that just leaves a small piece, about 15% of the capital requirement, that is obviously attractive to lenders, sitting alongside counterparties like Stellantis, GM, and the Department of Energy. So we don't expect that to take particularly long, and we'll bring that detail to the market as soon as we can. Once that's finalised, we'll be in full construction mode and looking to get the project well and truly underway in 2025. And I guess in terms of immediate news flow, you can expect to see some meaningful advancements on both those two projects, the mine expansion and the high purity manganese. Some key ones that are worth noting is an updated reserve statement, which follows on the back of the upgraded resource that we published in October. A refined feasibility study with updated financials will come with that. Signing of the DOE grant contracts, which are expected as soon, imminently, really. I can't set a date to it, but we're working pretty hard with them to get that done. And then obviously we look to finalise that, the balance of that project financing and key commercial contracts around EPCM and land and the like, and then commencement of construction on both of these projects in 2025. So I think it's fair to say there's a little bit more groundwork to do, but 2025 is looming as a big year for us on the back of a big 2024, and hopefully investors can see the opportunity that represents in terms of becoming a shareholder, if that suits your investment thesis. So thank you for listening. I think, Ryan, you've got some questions, and happy to continue the discussion with those and any questions that your audience may have in the background.
Thank you very much, Justin. Really appreciate the presentation. Found it very informative. So we'll just kick things off with a couple that I've got here before we pass it over to the audience submitted questions. So first of all, can you just tell us about what's unique about the Butcherbird project and its strategic importance in relation to global critical raw material supply chains?
Yeah, I think I touched briefly on it in the presentation, but there's a I guess over the last 20 years there's been a growing dependency on China as a supplier of critical raw materials, either as the primary source, but also perhaps in most cases the refining capacity for these critical raw materials. That obviously is something that means that countries like the US or areas like Europe or UK who want to build their EV capacity have a dependence on China, which they aren't necessarily that comfortable with. So they're all looking to diversify away. Australia is in a great position because we've got strong partnerships, not just with China, but also US, Europe, and Asia, and other parts of Asia. And those established trade relations mean that we're a great source for critical raw materials. And so there's a certain appeal to those end users for sourcing critical raw materials from Australia. I think in the case of manganese specifically, if you look at where manganese comes from, it's heavily reliant on African supply, and some of the sources like South Africa, Gabon, Ghana, where manganese is available, are not as geopolitically stable as Australia, and they don't have the same ESG credentials. So those are the things that make us a little bit unique. And I think our technology is the last piece, which means that we can produce reliable, low cost, ESG compliant, secure supply for a long period of time with the large resource that we have. So there's some of the things that make us different.
Yeah, brilliant. Thank you for that one. Now, just to address the elephant in the room, obviously in relation to the Department of Energy funding, realistically, how is that progressing, and will the upcoming change in government affect any aspects of this grant?
Yeah, so I think that it is a good question, and it's one that I get quite a bit. The messaging that we're getting is that it's business as usual. The funds have been appropriated for the grants. They've been awarded subject to finalising the grant contracts, which we're working our way through now. We don't see any material impediment to closing those grant contracts out in a timely fashion. We fully expect that grant to proceed to completion and the change in the White House to not affect it. So whilst we don't control all of that, the evidence that we can see in front of us is that the grant's well and truly on track.
Okay, thank you very much for the update there. Now, just to focus on a bit of a big picture here, why did E25 choose the US to host the HPMSM project as opposed to home soil?
Yeah, it's another good question, and again, it's not the first time it's been asked. I think Australia has strong ambitions to go downstream with these critical raw materials. I think I touched on the how big and wide open WA is. One of the problems we have, or challenges we have in WA, is that we're starved for infrastructure to support the downstream processing of raw materials like this. So we don't have things like sulfuric acid plants. We don't have things like ammonia plants. We don't have good logistics solutions for inbound cargoes in terms of project cargo or reagents and the like. Our labor force is limited in terms of its expertise in terms of the chemical industry, and a lot of these refining factories are really just chemical factories to some extent. So those are some of the challenges that WA in particular needs to deal with to become a player in this space. I think it's also worth noting that in the case of the US operation, there was some strong political drivers to build there, where the US is really looking to domesticate that supply chain. And obviously we've seen that through the support of GM and Stellantis and now the DOE. So I think there's some of the factors that come into play.
Oh, well, thank you for that one. Now, again, just the bigger picture on how is E25 supporting the global transition to decarbonisation and climate change mitigation? Obviously, I know you've spoken about this in your ESG credentials, throughout the presentation.
Yeah, no, absolutely, and I think if you look at the role that transport has in the carbon emissions globally, it's significant. And the way that we can best reduce those carbon emissions is through using electric vehicles and charging them with renewable energy. That's been well proven. The way that I think that needs to be done is to source the critical raw materials like manganese, like nickel, like cobalt, like lithium and graphite in a way which is targeting as low carbon intensity as we can. The E25 process does exactly that. So we take a low carbon mining operation, we then couple it with a very low carbon, low waste processing technology that we've developed, and we therefore produce a high purity manganese sulphate product with the lowest carbon intensity globally. So I think by coupling with efforts to improve technology to produce low carbon intensity raw materials, putting them into responsibly developed electric vehicles and then charging them with renewable energy, that is the planet's best pathway to getting the transport industry decarbonised, and that's what we're playing a part in.
All right, well, thank you for that exploration there. Now, just one more from me. What I'm really keen to hear about it is what's next? What's 2025, 2026, 2027 look like for E25?
Yeah, I think, look, there's a keyword just sort of buried in the bottom of that slide that you can see there called construction, and I think that probably is the takeaway from this. If we can close out financing for both the mine expansion and the Louisiana factory, which both of which are well advanced, I think we're on, odds are in favour to get those done early in 2025. Once that's done, subject to a couple of permits coming in for both sites, which are both also in hand, we should be well and truly able to commence construction on both these projects and really accelerate into a really strong growth period for the company. So yes, there's some housekeeping to do, permitting, finalising contracts around EPCM, finalising project financing and permitting, but they're all, we believe, under control, and then we move quickly to construction and building these things.
All right, brilliant. Thank you for that one, Justin. Now, just to shift here to a couple of questions submitted by participants. Now, which one are we going to do first? First of all, when can we expect funding from the Oz government for expansion of the Butcherbird mine?
Yeah, no, good question. So just to refresh everyone's memory, so we went through a strategic assessment phase with the North Australian Infrastructure Facility earlier this year. That passed successfully. Since then, excuse me, we've been in detailed technical due diligence with independent technical experts. We've also been working through key aspects of permitting and contracting. I can't set a date on the when that process will be completed, but we do expect it to be completed early in 2025, and obviously we'll bring a more detailed update as soon as we can to give people certainty around that process. But it's well advanced and going very well.
Okay, thank you. Now moving on, what will be your main challenges in the development of the Louisiana facility?
Yeah, I think, look, it's a long way away. I think getting obviously our expertise from Australia into the team in Louisiana is not without its challenges. I think also in Louisiana, there are not a huge array of mineral processing refineries like the one we're proposing to build. It's a oil and gas heavy location, so we are having to leverage off that oil and gas engineering expertise and try and kind of to some extent retrain to bring it to bear on a mineral processing technology. Having said that, that base load of capable labour around building factories of this type, albeit in oil and gas, is going to bode very well for helping us to get this project up and running in a cost-effective and timely fashion. So there's puts and takes like always, but I think it's a great place to build a refinery of this style.
Okay, thank you for that one. Now, just a couple of others here. Any chance of the Butcherbird project opening sooner than the second stage expansion?
Yeah, no, there is. I mean, we have, as your listeners may know, what we call our stage 1 pilot plant in place at Butcherbird. It's fully ready to be turned on. We've just been through a period of lower than typical manganese prices, obviously tied to the slowdown this year in China. That's actually starting to pick up now, so prices have started to turn the corner. So we are in a position to restart the mine if and when prices support that decision. We are, undertaking operational readiness activities in the background to be in a position to do that. So yes, there is potential for sure.
Thank you. Just to pivot here, is E25 looking at exploring gallium?
Sorry, Ryan, could you repeat that, man? I missed that question.
Is E25 looking at exploring gallium?
Was that gallium?
Yes.
No, nothing in the gallium space at this point in time.
All right, good. Now, another one here. Any chance of the likes of Tesla jumping on the E25 HPMN bandwagon?
Oh, look, I think, without sort of speaking out of school, we are in discussions with most of the global OEMs. Now, I won't name names, but yeah, look, they're all following a similar path in terms of wanting to secure ethical supply of critical raw materials, including manganese. Tesla has gone on record as saying they support high manganese chemistries and batteries. So, I'm not going to, like I said, I can't name names, but we're talking to them all and we're hoping to build new partnerships as we move forward into 25 and beyond.
I will appreciate the update there. Now, just a couple more to finish us off. Participant asked, with Nissan's current financial issues, do you have a potential backup partner for Japanese plants?
Yeah, look, I wouldn't read too much into that in the context of what we're planning on doing. I think that'll play out in the background. Yes, the answer is there are other potential partners in Japan who would look to support this, and I think that landscape will evolve. That timeline that we've got for that project is not going to sort of cross material thresholds in the next sort of 6 months. So I think by the time we get into the detail of negotiations there, I think hopefully those current events will have passed us by and we'll understand the landscape better. But yeah, I wouldn't be looking too much into that at the moment.
Okay. And just one last one to finish us off. I know you potentially may have addressed this already. Are you concerned about the rhetoric coming out of the incoming president's newly formed DOGE department, talking about radical cuts in government spending? Vivek actually mentioned the DOE the other day as a place of potential scrutiny.
Yeah, I mean, are we worried? I guess we're all sort of keeping an eye on the news flow that comes out of that part of the world. I think we're not, as I said before, we're not seeing anything that suggests that the arrangements that we've got in place are going to be affected. So we're just pushing forward under the current plan. I don't think that's going to change. Obviously, if new information comes to hand, we may change that. But right now, that's the plan.
All right. Well, thank you for your time and expertise this afternoon, Justin. Really appreciate it. Is there anything you'd like to leave us with?
Look, I think we're what we regard as a great opportunity to get a key position in a strategic critical raw material supply chain. I'd encourage your investors to read more detail on our website, join our mailing list if that's something of interest, and hopefully we'll see you back here at Sharewise again to give you a further update in due course.
Brilliant. Thank you very much again for your time, Justin, and thank you, E25. Ladies and gentlemen, thank you for your time. Enjoy the rest of your day. Cheers.
Thanks, Ryan. Thanks, listeners.